Hello traders everyone, welcome to our new webinar. My name is gbpusd and I'm a bit late, 4 minutes late. I apologize for this. I've been setting up some streaming options here, so hope everything will be running smoothly. As you know, I will walk you through a lot of charts today. As you know, markets have, firstly, markets were afraid that they were investors. I mean, that markets will sold off because of this, as you know, tensions between Iran and Israel. But looks like because this was on Saturday, and firstly it was like a very big negative news, and then till Sunday open when markets became active again, well, this sentiment has calmed down a bit. Okay, so apparently there is still a very nice potential support for stocks, because if after this potential fear through the weekend markets are not following back to the downside, I just think that there that any kind of a positive news, or if Israel will really not respond with the same actions, or if the US will not get involved, then of course this will be seen as positive for the market. So this risk-off, risk-on sentiment was very easily visible through cryptocurrencies. As you know, the cryptocurrencies during these events has firstly sold off very sharply, but then quickly stabilized, and now they are pointing actually higher. So for now, looking at looking firstly at the S&P 500, or better, to start with, maybe with VIX, known as fear index. This obviously is still not open. The cash market will open in 24 minutes, and what we are seeing is that there was some very nice spike to the upside into this previous spike that goes back to February. So always when you see VIX moving into some kind of extremes, this can be a potential support for stock. So we reached the first area, a little bit of higher levels for VIX if really things will get worse in the Middle East. Then of course I would be watching this area around 2022. Okay, so then of course the S&P 500 and all of the major indexes will be trading and testing the lower supports. But for now, I think that this is very good level to start with. I just think that whenever looking at the S&P 500, we have a pretty nice overlapping drop back into the previous fourth wave supports. We've been talking about this one last time, and the important is obviously that we are still in uptrend, higher degree. We cannot say that this is a top in place if we do not have any clear strong 5-wave drop. Of course, maybe some will say that maybe this is a leading diagonal. Yes, it could be labeled like this, but you will speculate that there will be a potential top. But always, if in a bull market and you are trading at new all-time highs, if you have a chance, or if Elliott waves allows you to label the pullback as a correction, then label it as a correction. Okay, unless you see maybe a Nasdaq 100 making a very sharp 5-wave drop, and you see a lot of major single stocks turning to the downside, then of course you will try to do the combination that all markets will be pointing into the same direction. But for now, it looks like that we are in a corrective phase here. Okay, but what's interesting, that even if let's say that I go a bit over the line here and say that okay, this could be a leading diagonal. Okay, what this means? Well, even if it's a leading diagonal, then it means that market should rally in 3 waves. So even in such case, you should see some recovery, even if just temporary, and you will see then a resistance at 5,290 to 80, around there. Okay, so I still think that in the short term, we could see more upside here on stocks. As I said, if the markets are not coming to the downside after this news, then I think that there is more chances that we will either go sideways or even test it higher price. But if we break this support, then of course let's say 5,125 would be the lowest one, then of course I would be looking for deeper prices, but still would observe a correction before market may stabilize and turn higher. Looking also at the German DAX, here we talked about this also. I'm not sure if I shared this one here in the webinar last time, or I did definitely on Twitter, so make sure to follow us on Twitter as well. So here we observe this pullback. It's a very overlapping decline, looks like a bull flag here. Very nice wave forward. We tested the 38.2%. okay, it's right here at the former wave 4. We are breaking this channel resistance. So if by the end of the day, okay, when we will potentially have more news from Israel, then of course this could, if we stay bullish here, then this could potentially lead to higher prices this week. So watch out for daily close price. It's very important to see how traders during the US sessions will actually read the current events. Okay, will they be selling rallies and look for safety, or will the market stay up and we will continue to trade higher? But from an Elliott wave perspective, I think that this whole price action is very clear. We have an impulse still incomplete, and the fifth wave, in my opinion, is missing. Also, this one is very interesting. I wanted to share this a little bit earlier, but forgot it. So here you can see when markets actually reacted to any kind of a potential war threat, and you can see that always when markets actually sold off, that happens because as soon as possible investors will run to safety, right? So the markets will sold off, but then when actually maybe real war starts, or maybe when things are a little bit clearer what's going on, that's when the market bottoms. So that's why maybe we are not seeing that kind of a reaction on stocks this time, because on Saturday stock markets were closed, okay, and by the Sunday open, of course, investors already calm down when they realize that maybe this is not so dramatic as it looks. But of course, you never know how these events will unfold through the week. Okay, that's definitely very important to watch. But if these things will get worse, of course, commodities will most likely fly even higher. Energies will also stay in uptrend, but you can see that actually crude oil has seen some very nice pullback, but I'm not really sure that's a top. I think that there is potential support around 84. I will get in crude oil to crude oil a little bit later, but here looking at the commodity index, you can see that potentially we are rallying higher here in 3 waves. Okay, and if maybe now when some sentiment is moving into extreme, especially with these events, of course, I am aware of the opposite. Okay, maybe there will not be such a bad scenario as it looks on the charts here, at least on this one. So if the commodities will at some point turn back to the downside later this year, I think that, because obviously this is not going to be 1 day, 1 week event, but still later this year, if commodities will turn to the downside, inflation will come lower, and this could also mean that the dollar would come down with the US yields. Since we are mentioned and talking about yields, let me take a look actually on where it is. Okay, so here we have actually treasury notes. You can see that I counted a completed 5 waves down, so I still think that corrective wave B could see much higher prices. I still think that this is just a temporary correction. Even if we suddenly drop to a new low, I just don't believe that we will see any kind of aggressive big weakness here. Just think that US yields and Fed rates will not see any big moves higher, and that there is actually a greater chance that market will reverse to the opposite. Even if there would be some kind of a war or something, of course, and if the US will get involved, they want lower rates, not higher rates, to fund the war. Okay, so actually that's also another important aspect that we should observe and watch for. Also, if you look at the TLT, okay, this one tracks the 20-year bond market. You can see that this one is also having a very nice 5 waves up. Now a very nice and deep 3 wave correction. The 61.8% is here, and obviously it can be a bit lower. The 78.6% is also a bit lower. So whole this area is quite attractive potential support for this market. Could show up by the end, let's say maybe already by the end of this month. Also, as we know, a lot of central banks are somehow turning towards dovish views. It's not anymore, it looks like it's not a question if they will cut rates, it's a matter of time when they will do it. Okay, so that's still somehow either sideways or even bullish for stocks. Okay, it's bearish for stocks if they would obviously if they would hike rates, but not really sure that will be in their scenario for this year. Even though the retail sales came out stronger than expected, as you know, today. Now, looking at dollar index. So dollar index last time we talked that 106 is a very important potential resistance. We are at the 78.6%. We are already testing these levels, but of course dollar index can depend on euro maybe just too much. So it's also very important to look at the whole broader picture for the dollar, not just dollar index, because keep in mind that the euro dollar could be pressured to the downside if the inflation in the Germany, in the Europe will come to the downside. There will be greater chances, as also noted today by ECB members, that there will be greater chance actually that they will be lowering rates in June if the inflation will come to the downside as they expect. Okay, so in such scenario, euro could fall potentially lower, and this could potentially send dollar index to the upside. So it's very important to have a maybe broader picture in view for the dollar, not just looking at dollar index. Watch out also a lot of other dollar pairs, okay, not just against the majors. Now, when it comes to the Elliott wave principle here, well, we still have a 3 waves up from this start of the year. So if we will start seeing bearish impulsive characteristics on a smaller time frame, and let's say we go back below 105, well, that would be a very strong indication that market is at least temporarily topping out here. Okay, so this level is very important here, as I said, 105. So if we can drop here, I think selling rallies would make sense. But for now, when we are at this area, it's really a neutral phase for me. I'm not sure if we are just continuing higher, discount will be invalidated, or we are really going to see more weakness. Because obviously I see 50-50 chances. I have another wave count here. Okay, and you can see that this one shows potentially that we are in a higher degree ABC correction. Okay, but still the important is that we are in a corrective phase. So this whole move up is correction. It's just a matter of time and also of the pattern if we'll see maybe more sideways price action or a deeper recovery. But I still think that this year dollar could see a reversal to the downside. Okay, if we start breaking here 107, then of course we will be targeting higher prices for a wave C to 61.8%, and then even between or within this lag there can be opportunities on the ups within this recovery after fourth wave pullbacks, because we know that wave C should be structured by 5 subwaves, right, before we can say that this corrective rally is completed. Now same thing but opposite side, of course, is here for euro dollar. So for now still testing, coming to the downside, some very key levels here. The 78.6% is a little bit further away, but still same thing with dollar index. As with dollar index, you have to see 5 waves up before you can say that wave 2 has completed. Okay, because if you will be more aggressive and looking for longs here, well, then you definitely should have in mind that invalidation level is down here. But since we have this alternate view, which is here, okay, this alternate view, I just don't think you want to get stopped out down here at this 104.50 area. So that's why it's very important, at least in the short term, to wait on some confirming price action before saying that maybe we are here bottoming. Okay, cable, well, this one is maybe a little bit more interesting and attractive compared to euro, but I think that this week there will be release of the CPI data from the UK, I think. So this will be very interesting, but you know, because a lot of speculations there is that central banks will be dovish, it's going to be a very simple trade if you will be watching the inflation figures very closely. So if inflations for this particular country will come to the downside, there is greater chance that they will actually cut the rate. So it's a very simple math here. But what I said earlier is that it's a very simple and very clear pattern here for cable. Okay, so we have these 5 waves up, and here we had seen a 3-wave setback, and then another potential 5 waves up, and now 3-wave setback. So I think that that's a very straightforward wave count, okay, which shows that direction should be up. Even if I adjust the wave count and say that this whole price action from July is triangle rather than now 1-2 bullish scenario, well, it's still a correction with an uptrend. So I will be looking for more gains after pullbacks that we are seeing. And if you look closely here on the 4-hour chart, as I said earlier, this one is much more interesting. Okay. Compared to this one is much more interesting compared to euro dollar, because we have these 3 waves of decline. Okay, wave C to wave A equality level, which normally represents the first potential support, is still a little bit lower, but we came very close enough to say that, not to say that we are bottoming, but from where, if we are going to see higher prices, I would not be surprised at all. Okay, so we also tested the lower trend line of this potential corrective channel. So whole this area is very interesting, and if we'll be able to rally in 5 waves, then I think buying pullbacks would make sense. Okay, if we are start breaking this lower trend line and even start aggressively selling below 1-370, where wave C equals to wave A, then of course this would be the different story. Then this current drop in 3 waves can become much lower, much more extended. So for now, it's a very good, nice, interesting potential support. But if you're more like a short-term trader, well, it's going to be a bit difficult maybe to say that this is enough to call a low and you will put your stops right here. Definitely then your stop range should be much wider. But if you will wait on a confirming price action, and let's say you rally back towards 1-580, then this would be a different story. Not sorry. Okay, now dollar yen, well, this one keeps moving higher. As you know, there were the reports that Bank of Japan will actually be holding meetings, maybe even with some other countries. The last time they intervened in 2023, I think that they done it on their own. So if they're also going to pull other countries into these potential interventions, then of course this reversal on dollar yen can be much more significant compared to the one that we have seen in November, if I'm not mistaken. And looking here, we are seeing still potentially very big, nice 5 waves up, either within wave 3 or within wave C. As you can see, big level is clearly going back to 1990. Which is around 160, but not sure if we can maybe move straight from here towards those levels. Keep in mind that on a 4-hour time frame, okay, we see 5 waves up, and even this fifth wave contains minor 5 waves up as well. So there certainly can be a very interesting timing if Bank of Japan will act. That potential reversal from that perspective would actually not be a surprise at all. Okay, not to mention that maybe this whole move higher and breakout is coming potentially out of a triangle, which I have it labeled here. Okay, and we know that moves out of a triangle could be final in a second. But of course, I'm not interested to short this one. Maybe if you're trading with options or something, maybe that's more of a different game plan. But when it comes to the spot market, you definitely want to see a top first before act, because there's a lot of risk on the table, and very volatile sessions can be in front of us with Bank of Japan talks. Maybe there will be just speculations and nothing will happen. Dollar yen will keep reading higher, which has been the case for the last few weeks, even if they changed their negative rate policy. Now, let me check my list here. We covered this one. We cover. Okay, so here we have also gold. Now, gold is quite interesting. It made a very nice run to the upside so far, but then at the end of last week we were seeing some reversal. So because gold is now holding to the downside, well, this is despite what's been going on through the weekend. Now this is the real indication that maybe there's not a lot of fear involved at this stage. Okay, it's totally different on the charts compared to what we have been reading during the weekend. Okay, but still looking at this wave count, I think it's a very nice potential pullback now in the making. Now very nice support could be around 2300. There you have the 38.2% and the previous sub wave 4. So this could be quite interesting area for potential longs. Also, of course, you want to see 3 sub waves within this within this wave 4 to make this structure within wave 4 valid. Okay, so that's definitely a very interesting support at 2300. If we are start dropping below 2250, which is the 61.8%, then I think it could be the higher degree correction. Then these short-term potential bullish trades can be invalidated. Okay, so usually wave 4 will not retrace for the 61.8%. Okay, it's somehow my guideline for maximum of retracement. So if I'm looking for potential entries at the 38.2% for a wave 4, well, then my stops will most likely be beyond the 61.8%. Okay, hope that makes sense. Now here's also another interesting chart for gold, which I've been covering also in my Elliott Wave 2024 outlook, which by the way is released always at the end of the year for the beginning of a new year. And what we have seen here and what I have been discussing in the past is that whenever the potential rates are going to see a new cycle to the downside, meaning that Fed will cut to the downside, and the opposite side of this, metals rallied. And we have seen a very nice, very strong example of this back in 2007, 2008. As you know, back then Fed moved to lower rates, and it kept them at the lowest pace for a longer period, and during this time gold rallied. Then again we have seen a small increase in rates here back in 2000 through 2017, 2019, and then again when rates came to the downside, gold started to break to the upside. Now what we are seeing here, well, we are seeing rates at the potential top. I don't believe that they will hike rates further. Okay, but even if they do, they just really, if they surprise, and they would do it, let's say later this year, if dynamics changes, well, I still don't believe that this will be any kind of aggressive hikes. So potentially sooner or later there will be a new cycle to the downside rather than to the upside. So if this would happen, okay, what may follow on gold, since gold is already very, very strong. Okay, it surprised me as well that it came so much higher despite rates stacking here. But of course the markets are trading based on speculations and expectations for the upcoming months, and if these rates are really going to start reversing, lowering, turning to the downside, then I think that gold will see even more upside here. Okay, so I think it's worth to watch and observe the consolidations that we are seeing on a smaller time frame to potentially gain within this higher degree trend that we are in. Of course, the whole cycle trend and potential top for gold would change if we start dropping back below 2000 level. That's regarding the bigger levels. Okay, now let's take a look on crude oil. So crude oil may be short term. Notice that we are holding some channel support here. We've been rallying on Friday just for a tick. We traded to a new high and then a reverse back to the downside, and it looks like that we could be forming a very similar price action here. I just don't believe that there will be any kind of sellers showing up during these events. Okay, if there is risk in the table, then either crude oil will stay sideways or it will even turn to the upside. Okay, so I think that energy could potentially be making a flat correction here for a wave 4. So there's a very nice support in 24, 50, 40. Deeper one is around 23, which was the previous swing high here. Also, it's worth to note that this one, ExxonMobil, is also in a very strong uptrend, and it looks like that we could be just, even if we stay sideways here for the next few days, could be just a correction within uptrend. So what will be interesting is that maybe before summer, during summer, in second half of the year, I just think that there could be potentially top formation for this market. Okay, and energy also, when looking at crude oil, could then be potentially topping out, because I think the drop here from 2022 is in 5 waves, and this rally is in 3 waves. Okay, can be in 3 waves if we rally up to 95. If we'll see lower high here and let's say stop around $90 per barrel, then this whole wave B can even be a triangle. But in either case, there will be limited upside, I believe, in the next few months. Okay, and I think that whenever this market will turn to the downside, that's when inflation could also come lower, which, by the way, would not be surprise for me, as we discussed earlier with that commodity index charts. Okay, now what I have left here, by the way, if you have or if you are a first-time visitor here on YouTube, if you're watching this on YouTube, make sure to subscribe to our channel. Please press a like. If you're watching this recording, leave us a comment below this video. Okay, if you're interested in more analysis like this, make sure to visit wavetraders.com. Okay, so here we are now in our app, wavetraders.com. So what I will cover now is actually looking at cryptocurrencies. As you know, this is total market cap. As discussed earlier, we have seen a sharp sell-off on Saturday during these events in the Middle East. The market quickly stabilized, and now we are turning back to the upside, it seems. So if this was a correction, then we know that new highs should come. Okay, maybe not straight from here, because when looking at Bitcoin, which by the way is here, it could also be a triangle. I would love to see, I'm not sure where the market is currently trading, but I will check in a second. But if we start breaking 68,000, then this would be very interesting and very important indication that this drop from here, from last week highs to recent lows, has been in 3 waves, not in 5 waves. And we know that whenever we have in a sideways consolidation 3 wave structures in each directions, well, this represents a pose within a higher degree trend. So looking at the daily chart, I posted this on Twitter as well, I think yesterday, that despite this a lot of fear, there's still ongoing healthy consolidation within uptrend ahead of halving, which I think it's planned for April 19. So there's interesting to see this deep correction ahead of halving. There were a lot of liquidations, and probably maybe still will be even more liquidations before halving will occur. And maybe this is something what needs to happen for market for easily to continue higher. Okay, looking at liquidations heat map here on Bitcoin, there's a very big numbers of liquidations, 3 billions actually at 71,700. So maybe this one could be in the short term like a magnet. Okay, and then let's see if we get some pullback, and then you try to scale into long trades if you are looking more like a short term trades. But overall, I just think that directions for Bitcoin is quite clear. Now Ripple is also maybe very interesting. I'm not sure why. Let me check why there are no labelings here. Okay, here they are. it was different layout. So Ripple has made an interesting sell-off here. It probably liquidated some of the longs here, which the level that goes back here around 43 cents, that goes back to August 18th, 2023. So I think it's pretty interesting potential support. If we start building the base here and we will be stable around 60 cents, then I think that there can be more upside, at least towards the upper side of the range. But it's not breaking out at yet. Obviously, I still think it's a very big consolidation, but the reason why I'm focusing on it right now is because I realize that this consolidation can be in very late stages. When no one is interested in Ripple, then we know that maybe the volatility could actually be the opposite. The price could break out when least expected. So I'm very curious to see if we can maybe run even towards 70 cents in the next few weeks. Then I think that much more upside potential will be in the cards for this one. Okay, okay, traders, that's it from me for today. I hope that you enjoyed this webinar. I know that I didn't cover some US single stocks that I usually do, but I will make sure to post some of them on our Twitter channel. So make sure to follow us there as well. And if you're, as I said earlier, if you're interested in more analysis, make sure to visit us at wavetraders.com. Okay, traders, good day. Enjoy trading this week. Bye.